In Washington, property tax is administered locally by the county assessors and treasurers. It is based on the value of the property. Most people know property tax applies to real property, such as land and buildings. But did you know that property tax also applies to personal property used in business, such as machinery, equipment, and furniture? Personal property tax, like property tax in general, is one of the oldest taxes in Washington, but it is less known. That's what this short video is about. It will help you understand the ins and outs of personal property tax a little better. In this video, we'll tell you what is taxable personal property and, just as importantly, what is not. We'll show you who to contact to complete a personal property listing form. Lastly, we'll show you how to get your questions answered quickly and how to get help when you need it. What is taxable personal property? Taxable personal property meets two criteria. First, it includes the things you own and use for your business, but does not include inventory for sale. And second, the items can be moved and are not part of real estate, like machinery, furniture, and equipment. In just a minute, we'll cover some of the exemptions. There are just a few, but they're important to understand so you meet your tax obligations, but don't overpay. Here is a list of some of the categories of taxable personal property: machinery and equipment, furniture and fixtures, signs, farm machinery and equipment, leased equipment, leasehold improvements, communications equipment, and tools. Now here are those personal property exemptions we mentioned before. Basically, personal property tax won't apply to personal property owned by individuals, such as household goods and personal effects, unless used in a business activity, property owned by government agencies, business inventories, including goods for resale, ingredients or components of articles manufactured for sale, and livestock, cargo containers used in interstate commerce, property owned by schools, cars, trucks, or motorcycles used primarily on public streets, intangible personal property such as trademarks, patents, brand names, and money. In addition, there may be exemptions for personal property owned by qualifying nonprofit organizations, such as churches and social services. But these organizations must apply for the exemption annually. So what is your responsibility if you have taxable personal property? In Washington, every individual, corporation, LLC, association, and partnership is required to list their taxable personal property. Every year, you must file a personal property listing form with your county assessor. It should include all personal property you owned or controlled on January 1st of that year. The personal property listing form is due by April 30th. If you file late, the assessor may apply penalties. The assessor is required to determine true and fair market value of the personal property you list. The value of that property is then taxed at the same rate as real property. To get personal property listing forms or to ask specific questions related to the taxability of personal property, contact your county assessor. If you have questions about your property tax statement, those should be directed to your county treasurer. You can reach county assessors and treasurers by phone, located in the government section of your local directory, or by the internet through the department's website. If your county assessor or treasurer cannot answer your questions, we've got experts to help you weekdays from 8 a.m. to 5 p.m. They're ready to provide answers and connect you with the resources you need to conduct your business and pay your taxes. Thank you for watching. Our mission is to fairly collect revenues that pay for public services. Working together, we fund Washington's future.